Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively, email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, .au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performers for the week that was, and of course our hottest stock picks for the week to come. Now, before I go any further, please allow me to introduce you my investment panel and resident experts in the market. The ever wonderful Caroline Wong, the ever stoic Gabriel Ryan, and of course our senior trader, Linson Cow. All right, I want to start things off by jumping straight over to Caroline this time. We're going to mix things up a little bit today. I like to keep things on their toes. And I want you to talk a little bit about unemployment that's come out, because that was one of the announcements that's happened this week, as well as many announcements that have gone through our system, I suppose, for the majority of this week. Why don't you tell us a little bit about what you've been seeing?
So our unemployment report came out yesterday. It was a good jobs report for the month of January. If we jump straight into the chart, we can see that the top part of the chart focuses on unemployment rate. So January's unemployment continued to trickle lower to 6.4%. So this was down from 6.6% in December, So this is on the back of RBA stimulus efforts as well as massive government spending.
Okay.
And then if we look at the bottom part of the chart, it talks about participation rate. This one also fell 0.1 points to 66.1%. So what usually happens is that unemployment rate moves in the opposite direction of participation rate. However, in this case, they're both moving in the same direction, which alludes to the possibility of a smaller working age population.
Okay. So a good, bad, not
good.
It's good.
Good. And RBA has a positive outlook for the rest of the year. So by 2021, this year, it expects unemployment rate to fall to that of 6% and then 5.5%.
What were we pre-COVID? Any ideas, gents?
Around this level, but at the peak of the COVID, we're at 7.2, 7.4.
So we weren't that bad, really, compared to what we could have been. Let's sort of wind things back a little bit. Obviously today was a day where the market had, if you're optimistic, you'd say a slight pullback, but it was a little bit more than a slight pullback. 1.6% at the close. Is that right, Gabe?
I think it was something along those lines.
Yeah,
it did begin
close
to move back up towards the end of the day, but I think it went around.
1.4 the last time I saw.
Yeah, it's a big drop off, isn't it?
Yeah, it was.
We were, to be fair with you, we were more or less due. Was this just, what caused this, do we think? Was this just over exuberance? Were people sort of just getting a bit fed up with going up and thought now it's time to sell off?
Yeah, let's go with healthy pullback, because it's not like some giant political event occurred in the last 24 hours. It's there were negative leads from overseas, but what was the figure that came out today? Was retail sales? Yeah, so that undershot as well. But the market was already heading down before that as well. That obviously did not provide any catalyst to turn it around. So.
And retail sales not flash here, but they were okay over in the USA. Was that right?
That one I don't recall. But
Correct.
Yeah, so they were quite good over there. You would have anticipated us to go in the same direction.
I mean, that was still positive. It was positive growth. It just didn't meet expectations this month.
So let's talk about what's on the top of everyone's mind. I'm going to go over to Gabe for this here, because we've been banned from Facebook. Is that right? Or we've got issues now that we can't post news? What's happening there? Explain.
So essentially, I think the issue was that the government wanted Facebook to start paying the news outlets for putting their content on their platforms. And naturally, Facebook wasn't doing that before, I believe. So, you're having to fork out more money for these people to essentially do what they were doing before. I guess it's in the best interests of the media outlets. And so they pulled everything off now, even non-news stuff. And
They claimed that was an accident, though.
yeah,
It's,
but
yeah.
who knows? But I think this is more interesting insofar as I think most people do get their news from the internet
Yes, right.
and from sources such as Facebook or Twitter or Instagram, whatever you use.
Have you guys ever bought like a physical newspaper, or were you guys past that age
Oh,
where that happened?
I bought
Oh,
some for my
nice.
dad
I,
when
I
I
can
was
see,
younger.
I can see how you're very clearly excluding me from that question. What are you saying, that I'm a bit older? Is that
Oh
right?
no, I meant you as well.
Oh.
Yeah, I included
Yes,
you in the
I have-
youngins.
Yes,
but,
I still regularly buy a newspaper now.
Oh, really?
Yeah,
Like a
yeah,
physical?
AFR, yeah.
Can I ask why? When it's all online?
I like to, I like to sit, on a Saturday morning, I like to drink a coffee and read the AFR.
So you'd rather pick up the paper than pick up an iPad?
Yeah.
Yeah, okay,
So,
that's fair enough.
yeah, call me weird, call me old
That
school.
makes a different sound when you
Yeah.
shake it. So
Yeah, well, I have, but yeah, that's I used to buy a lot for my father though. He used to have a lot of them. He used to always tell me to go in and buy a paper.
Yeah,
I
to be
don't know if
fair,
that happens anymore.
no, to be fair, I only ever bought newspapers for my father or grandfather, so I was never the recipient of those.
right, okay.
Although
But
everyone really
we're,
got-
we're very
birthday.
much, we're very much digressing away from
Sure.
the point. And to be fair, no one really cares. But
That actually could be a good time to pull up that chart, the Facebook news chart, if you
Yeah.
guys could help us out
Yeah.
with that. So I found this interesting because it deviates from how I actually look at my news and maybe how the rest of the panel does as well. But if you have a look at that, the key takeaway from this is that 50% of news is accessed via either Facebook or Google, which I found curious. Now, if I were to draw my own chart, I know that the percentage from Facebook would be basically zero because I use Facebook so that I don't miss out on events and my mates' photos. I don't go into Facebook to look at news. We generally go directly, or if we know that there is some sort of news event that we want to look up, type it into Google, see what news sources are going to provide us some color, and we click through on that. So it is kind of curious. I didn't realize how many people were going through Facebook to get their news, and now those people are completely cut off. So especially, as Gabe mentioned, just info on, say, the Children's Hospital or on COVID related news. If you can't get access to that would have been quite a shock to a lot of people yesterday.
mind you, when you think about it logically, I mean, let's take our own clients, for example, or our own network of people. I mean, we publish many articles every day, 2 or 3 articles every day. We usually follow some sort of a hot opportunity or some sort of a company announcement. We usually post a morning wrap, which is all about what's happened the night before, and an evening wrap, which is done by Mr. Ryan. But those are all published, they're sent via email, but they're all published directly onto Twitter,
Social media, yeah.
Facebook, LinkedIn, and of course, Instagram. So it's probably not that far from the truth when you try and think about it. I know I myself would never go onto Facebook to look at news, but that's simply because I've got it all at my fingertips here with Bloomberg,
Yeah.
etc. So what is it sort of telling us? I suppose Gabrielle, what is it sort of telling us about where things are going to move now? Because we had a conversation, didn't we? Josh Frydenberg actually called up Mr. Zuckerberg and had a discussion with him twice, I believe.
Well, you would know better than myself. I wasn't privy to that, nor did I really know much about what the actual discussion was. But certainly interesting.
They did have constructive discussions, I believe, is
Constructive
what he said.
discussions.
But what's interesting about this is the precedent it's going to set. I can understand why Facebook is pushing back on it, because if they do pay the Aussie government in the way that they're intending, there's nothing stopping every other jurisdiction in the world from implementing the same sorts of laws. And I think that's just a precedent they don't want to set. However, Google has started going down that path by striking a content deal with News Corp.
Correct.
So interesting to see where that goes in every other jurisdiction as well.
I mean, to be fair with you, it's pretty brave of us. I mean, we are, in the general scheme of things, relatively insignificant. And there we are picking, going out to, I know we said some pretty harsh words. I know someone said that it shouldn't be all about the money. Facebook, stop thinking about the money. This is on CNBC, I believe. Stop thinking about the money. It's not about the money. Okay, this is about doing the right thing. We're actively going and saying this isn't right. Is that a wise decision for us to be saying to let's say that one of the top 20 wealthiest guys and most influential
I mean,
guys.
it's on brand, isn't it? We were the first ones to talk about the independent investigation into the origins of COVID.
And how did that go for us?
Yeah, it didn't turn out the best for us. So, I mean, I'm not saying it's wrong either. I've sort of flip-flopped on where I stand on this, because you can see the argument that Facebook and Google are making, which is we are directing readers to their website. We're actually doing them a favor. Why are we paying for content? But at the same time, it is not wrong for these content providers to say, well, you guys are selling ads on the back of these redirections from your websites to our articles that we've written. So it's actually not really black and white, at least not in my mind.
Absolutely. Let's cycle away from all that, because that's all very very interesting things that we're doing. But let's talk a little bit more sort of closer to home. We are out of lockdown. I know last Friday we had just gone in, Melbourne had just gone into lockdown. Okay, now we've come out of it. Is that right, Gabe? We're smaller numbers, or?
Yeah, so I actually don't know what the case totals are, but I'm pretty sure they're near zero, at least for the broader country. I think Victoria may have had a couple of cases in quarantine. Aside from that, though, it appears to be pretty minimal. And I suppose the tennis fans will be happy with that.
Yeah, I've been told that this was, however, one of the most damaging lockdowns, because it was so snap, and it was a full lockdown. Is that right?
Yeah, I think it was, and the Premier wasn't really giving any indications as to when exactly. He wasn't committed to opening it up on Wednesday. I think it did, but I guess, again, talking about precedents, it's set now, so they will do it whenever they need to.
Caroline, let's go over to yourself. Any news on what's happening with the vaccinations rolling out? Are we across any of that, or?
So next week, our frontline workers will start receiving vaccines, Pfizer vaccines, and the government is expecting for 35,000 jabs to be issued in the next 3 weeks.
Okay, I wonder where we're going to fit in the whole scheme of things.
I know I'm going to be ahead of you guys just because I'm older, but unless one of you develops a
physical disability.
Yeah, some sort of it puts you ahead of me.
Yeah,
I think I'm going to get to go first, but it's going to be a while away. None of us are in. Sorry to say, guys, we're not in essential services at the moment. So
come on, don't be like that. don't be like that. So in terms of the market, I mean, I know we had a softer day today. It's been a pretty choppy week, but generally, is this time to buy? Are you thinking that this could be buying time, or?
I mean, the market continues to be bullish. Let's pull up another chart. We've got the elevated valuations. So at first glance, you could say that the market is running hot because price earnings and price sales multiples are running high. However, there are reasons to suggest that this is not necessarily a frothy market. Number one, this is only looking at earnings or sales. So what it doesn't take into account is the fact that interest rates are so low. So if you're going to build a discounted cash flow model and forecast future cash flows, discount them back to the present value, I won't go any nerdier than that. But if interest rates are low, clearly that final number is going to be higher. And that's not captured by PE or price sales multiples. On top of that, with more and more emphasis, or I guess greater contributions from tech firms, which generally are going to have higher price multiples, it shouldn't maybe be surprising that we are getting relatively higher multiples, price sales and price earnings multiples as well. And it's interesting to note, actually, it's not on this chart, but volatility measures have been trending down as well. So if volatility was heading up with these, then you could say that it's maybe something to be a little bit wary of. But generally, when volatility starts coming off, that is a reason for optimism.
Very good. So bullish market long term. Bit of a dip, maybe a buying opportunity.
Yes, potentially, yes.
Very good. Well, ladies and gentlemen, you heard it here first. Now, we're going to take a quick short break. If you have any questions for our panel, please feel free to take a video and email it through to info@kosec.com.au. Now, everyone who does will receive a copy of our book, Stock Market Success, Retailing in Dymocks for $39.95, or our magazine, Selling in News Agencies Australia wide for $19.95. We'll be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
Welcome back. Let's talk about currencies and commodities, all things that shine, sparkle, fold, and make the world go round. let's go straight over to Mr. Cow. How are we doing with gold and oil this week? Share your insights.
Which one would you like me to start with?
Let's start with gold.
All right, so let's go with oil then. So you see that oil continues its ascent. Now, it did take a break from its 12-month high. It has pulled back. Obviously, one of the big news stories with the price of oil has been the disruptions to supply over in the US. And I think the figure that went around was about 40% of their output has been affected. Now, if you just look at the chart of oil, which we can bring up, you can see that's very clearly in an uptrend. Again, you don't really want to stand in its way. If you look at that most recent candlestick, it is red, but it has also formed a hammer as well. So until that significantly turns around, I don't think that's something that you'd want to stand in the way of. Then let's go on to gold now. Now, this is looking quite different to the chart of oil. So a lot of this has been driven, we said this so many times on the podcast, but it's inversely related to the US dollar. So the US dollar has taken a breather from its downward trend, and it has made a higher low and a higher high. But I wouldn't say it's an uptrend by any means, but
I'd say if I looked at that, and just looking at that chart there, I think that'd be risky to hold on to that at the moment. Okay, just simply because, hey, it could go down a little bit further before it comes back. I think very long term, you'd be quite bullish on gold, but
we've said that so consistently, but you're right.
Short term, that does not look like that looks like a very anemic chart.
Exactly. So it's right around that, theoretically, that support level, that previous low around 1760. If it breaks through that, I'm going to assume that there's going to be a lot of stop losses sitting just below that level. So so it'll be interesting to see what it does from there. But you can see that's making those lower highs and lower lows. That's never something that you want to see.
And it was looking quite good for a while. Like it was on that bottom trend. Maybe take a bit of a punt that it might have been the turnaround point. Like it was sort of that upward trend. Now it's broken through that and just now seems to be really...
It's a tough one. I mean, you guys know I'm a little bit slower and a little bit more conservative with that sort of thing. So I don't think I would have ever tried to go big time into gold in any time recently. But I don't think many people would have predicted this level of sell-off just yet. And like I said, this could happen in the next 24 hours. If it breaks through that previous support level, I think there are going to be a lot of stop losses getting triggered below that.
Absolutely. So are you bull on oil in the short to medium term?
Yeah, in the short term, there's no reason until we see it turn around for that to happen. And we always say that OPEC is a dynamic that's always lurking in the background. I think it wasn't big news, but some commentators have mentioned that potentially OPEC could use this as an opportunity to start trickling out some more supply, so pulling back some of those.
So that could cause a little bit of a softness in there. Certainly.
Yeah, potentially. I mean, nothing goes up forever. So
yeah, exactly. We want to be something a little bit risky on. Okay, well, listen, ladies and gentlemen, we actually got an email in, something to do with commodities, and we're going to have a quick look at that right now. So, hi, KOSEC recently mentioned the commodity supercycle and have been increasing, and it's been increasing in the news. I was wondering what commodities are likely to be impacted and hence what Australian companies could benefit from this, I'm assuming. Very good question. It's something that we've been talking about quite a bit in the past, this commodity supercycle. And I feel like we're monopolising a lot of your time, Mr. Carl. I'm going to start you off with that and feel free to pass over to Gabe and Caroline.
Oh, what? I thought you were definitely not going to come to me after that. Okay, go on.
Yeah, so commodity supercycle. You spoke about it a bit last week.
Yep.
A lot more upgrades of commodity prices for people.
I mean, Chinese New Year did put a little bit of a damper on iron ore, but that's continued its ascent. That's looking good.
5% recently, last 24 hours or so.
One very obvious one, nickel. I mean, that's just made, another 13-year high again and again. A very obvious one that it bodes well for is nickel mines.
Yeah.
Very creatively named. But we have seen nickel mines, it held that support level at $1.20. We have been watching that quite closely, and it's now back around $1.30. So
good buying opportunity. Gabe, you follow nickel quite extensively.
Sure.
Care to share your insights? Is that going to keep running, or because this is one that there's a lot of demand for? I mean, nickel obviously goes into stainless steel, and also into electric car batteries.
I mean, this is something that we've probably discussed quite extensively over the past few months. It's moving in a really positive direction on the London Metals Exchange. A couple of days ago, it hit its highest since September 2014. So it's really moving in a positive direction. And why wouldn't it be, really, considering what it's used for? Not only the EV spaces that heavily employed also within stainless steel, other industrials as well. Chinese industrial recovery moving forward, something which will continue probably to get a lot more traction.
And I think probably the other thing I want to just touch on is copper. Now, I mean, copper is an interesting kettle of fish. Now, I've heard that most firms can produce copper, and if they sell that copper for more than 5,000, if it's trading more than 5,000 for a spot price, then most firms are quite profitable on copper. I understand copper is trading closer to 8,000. Now, don't quote me on that, but is that roughly the case, Caroline? Have you been?
So this week it touched 8,400 before slightly easing off to 8,309.
It is amazing how informed you are about that. I thought I might have just sprung that on you last minute. That's very good. So it is something you've been watching a lot of, and it has been moving up, yes?
Yes, correct. And aluminum is another one, up 1% overnight. It's now hitting 2,100. But also, in terms of the commodity super cycle, I was just reading this Goldman Sachs research. It says that you can't look at commodities in isolation. So if you're looking at iron ore, you got to look at it together with oil. You got to look at it together with copper. So it have to be together. It's a collective thing.
It's interesting, isn't it? Because I've been watching copper just continuing to move up, and a lot of people say that copper is a bellwether to the economy. I mean, they say that if copper's moving up because copper goes into so many electronics, etc., they say it is a bit of a bellwether to an economy. If it's going up, then that means the optimism surrounding that does look quite attractive. Nickel, for obvious reasons. Iron ore is moving up because of that. If we look at the traditional commodities, which is gold, oil, maybe silver, maybe in there as well, one of them's doing well, one of them's not doing so well. It's a bit up and down, but there's so many other commodities. Like we're talking cobalt, we're talking copper. Obviously, I suppose there's lithium in that space as well, I suppose, in there as well. So there's a lot of different commodities. Is that what we're talking about when we say a commodity cycle?
Yes.
Yeah. So all types of commodities, not just the gold and oil.
Yeah, I mean, gold is obviously one of the exceptions that we've seen. So we've spoken about it on the podcast before that gold has been losing its status as a safe haven in recent times. And I think I mentioned in the investment meeting that potentially that was because a lot of the growth in recent years has been driven by monetary stimulus. So interest rates being kept low by central banks, providing a boost to all risk assets and also include gold as well. But maybe as we see fiscal stimulus starting to take hold, maybe this is a good time to bring up the bond yields chart, actually.
Yeah, absolutely.
So if we have a look at rising bond yields, what this, I know this is maybe less of a short-term thing and more of a medium-term trend as well, but you can see here that when bond yields rise and the yield curve starts to normalize, that's generally a sign that the economy is going to recover. However, that also means that eventually there is going to be a tapering and interest rates won't stay as low. So potentially this is one of the reasons for the strengthening of the US dollar and thus the weakness that we've seen in gold recently. But everything else, all the other commodities seem to be going quite nicely.
Very good, very good. And not excluding, of course, iron ore, which we've been keeping our beady little eye on, the old iron ore. Caroline, how's that all moving? Positive still? Or?
Yeah, it was relatively unchanged for the first 4 days, but when
because of the China,
but when China markets returned to trade yesterday, it was up 4.9%, trading above $170 a ton. We have had different mixed forecasts about the price of iron ore moving forward, but I feel like the general consensus is the price will likely to hold up above the first half of 2021. As long as Chinese policymakers deprioritize infrastructure-intensive sectors.
Okay, very good, very good. Let's go over to Gabe, because talk to us about something that has been in the market quite a bit. Okay, the old Bitcoin. That's certainly been that's going parabolic. It's broken through 50,000, 52 roughly, between 51 and 52 at the moment. Moving up. Lots of news coming out on the front of that. Talk to us through what's happening on that front.
Well, I mean, it just, it continues its ascent. And, we obviously saw Tesla investing $1.5 billion into it. So
I heard that they made 700 million or something from that. Don't quote me on this. I heard they made about 700 million from that, which is more money that they made from that investment in Bitcoin than they did for their entire year selling cars.
Yeah.
Did anyone else read that?
I think I saw something along those lines, yeah.
which, well, I mean, wouldn't surprise me if it was if they put 1.5 billion into it, and it went up how much it's gone up. I mean, it'd be safe to assume.
It's very interesting, because 1.5 billion seems like quite an astronomical amount of money, but when you consider the actual market cap of Bitcoin, which is it's just shy of $1 trillion, it's really a fraction.
Yeah, of course.
What Bitcoin's currently doing, and I guess it ties in nicely to the gold point. We have seen gold do relatively poorly, despite the fact that inflation expectations are moving in a upward level as well. Gold should potentially do well, however, it isn't really, and potentially there is talk that Bitcoin is taking its place as the hedge against inflation and the anti-inflationary asset.
And they're constantly coming out on the news. Like I know on CNBC, they're always talking about it now.
Of course they are.
Is that why wouldn't you, right? Is it a bubble? Is it just going to burst at any stage, or do you think there's enough institutional backing behind it that this could start to stabilize?
Well, I'm not going to claim to know what is going to happen. Obviously, volumes are incredibly high. Increasingly, more retailers are probably going to become attracted to it, as essentially, cryptos have almost been like underground for the last few years, because Bitcoin's come out of the surface. Read it's head past 20,000. Now everyone is talking about it, and as it gains more traction, people find out about it. They will probably funnel money into it. I mean, if you look at it on a chart, it's just on a pretty consistent upward trend. If you bought at any point last year, you would have made money basically.
Yeah. I think one of the big things that I hear a lot about, a lot of people that come across to us from other institutions say, I've asked my brokers about Bitcoin. They never know. They always tell me that it's not good. And this was when it was $10,000. And now it's up above that and stuff. And I said, why don't they talk to you about it? And they say, well, they don't like it. And I do find that quite a bit. A lot of very savvy financial professionals don't talk too much about it. Now, at KOSEC, we have a lot of questions that come in around about that, about the crypto. We're always very happy to discuss it with them. Is it because like older advisors or older firms that are just completely against anything new, or what do we know the reason?
If you don't understand it, I can understand why you'd be skeptical.
Exactly.
Of it. We've never seen anything like it before. Like it was just inconceivable when I was younger that something like Bitcoin would exist.
Yes, of course. So yeah, I mean, I suppose that's one of the big things that we say. We get a lot of people that are asking about it, but I think it's not as much of a taboo subject anymore. A lot more people are like, yeah, I can see. I think what Elon Musk has come out and said, yeah, that makes a bit of sense, and etc. Perfect, very good. Listen, so that's commodities, currencies, and the events that shape them. Now, are you a bull or a bear? Let us know. Our phone lines are now open. In the meantime, we're going to take a quick break, and when we get back, we're going to take a look at what the best and worst performers in the Australian market were this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working over time, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Let's move on to our next section now and have a look at what the best and worst performers for the week were. We're going to go straight over to Caroline and we're going to have a quick chat at your chart, which you've been very diligently doing every week. What's been going up, what's been going down?
Okay, so just about the performance for this week, our local share market. So it resembled the inverted U shape. So we were up the first 2 days, but then we gave back all our gains yesterday and today. We're down 1.3% today. We jump straight into the chart. Up to Thursday, best performing sector materials up 1.06%. A lot of the heavy lifting was done by iron ore miners. BHP recorded a new high following the release of its first half results. And if not for yesterday and today, Rio Tinto would have been up by 8% this week. And another sector I'd like to talk about is healthcare. So it was up 0.6%. This was on the back of heavyweight CSL, who reported a strong first half report, record dividend as well. And finally, our worst performer this week was utilities, down 1%. So broad-based softness around the sector. APA Group down 3% this week.
So talk to me a little bit about the iron ore miners, because I know it's been something you've been keeping a close eye on. They've obviously reported now. Is there anyone in this room, including our tech boys, who do not think that the iron ore providers wouldn't have posted some good numbers? No one really. I think everyone knew they were going to do. Were they in line with expectations? Fortescue, BHP, Rio, were they in line with expectations? Did they do well? What was the
So
story
actually,
there?
we pull up the dividend payout chart. We can see that for Rio, Fortescue, as well as BHP, their dividend payouts, their actual dividend payouts was much higher than that of forecasted. So Fortescue was giving $1.47 a share, $1.47 dividend.
That's like a 93% increase on dividends. Is that correct?
Yeah, because in the previous period, 6 months ago, it was a $1 dividend a share. It's now $1.47 a share.
Wow, so that's a pretty big thing. I mean, what does that tell you? Does that tell you that they've now got a lot of cash on hand and are they splashing it out? Are they trying to make up for the fact that they blew that budget out on that
I think
project?
it wasn't BHP. They increased the dividend, but part of that was they said they're actually increasing the payout ratio. So they're going more, let's return the cash to shareholders rather than reinvest it.
Okay.
Into the market. Yeah.
Yeah.
Various reasons why it could have happened, but generally it is a positive. And the share prices of both BHP and Fortescue, I can't remember Rio, but both of those first two I mentioned did react positively on the back of the news.
It's a very good dividend. That's going to be one of the higher paying dividend stocks within the exchange. Let's go over to Gabe now, because I want to have a quick chat about the tech sell-off. Now, tech was looking like it was ready to rebound. A lot of stuff was lining up very nicely with this this tech story. A lot of them are reporting well. A lot of the big tech companies over in the US were doing exceptionally well. Then it's sort of come out, big sell-off. US had 3 down days in a row. NASDAQ was the worst performing of the indices overseas. It's caused our tech to have a bit of a negative slide. Thoughts? Could you give us any insight into that?
Well, I guess just keep in mind, I think for 3 consecutive days, they did hit all-time highs before as well. That wasn't just the NASDAQ, but the Dow as well. So I guess, you can have any justification for this. I think there was some negative jobs data out from the US as well. So probably weighing a little bit more heavily on the broader market. And, it is worth noting that over there, PE ratios are pretty inflated on tech companies, as they usually are. Is this just, a little correction with tech? Maybe. But, I think those reasons are probably pretty sound.
Okay. So in terms of where you see some growth, which sectors do you think we've got potential growth affiliated with?
Well, based on our previous discussion, I think materials is probably a very good sector to be involved in moving forward. Very choice materials, of course.
In a super cycle, there's no reason to not jump on board that.
Exactly. Yeah. It's almost a no-brainer. So I think, nickel, iron ore to a potentially lesser degree, oil, all things which are probably going to do pretty well moving forward as we head into this super cycle, as it's been dubbed.
Yes.
It makes a lot of logical sense. So I think probably a very interesting area to be watching.
Yep. So in terms of, I know CSL reported very well, healthcare company, but Sonic Healthcare has also reported very encouraging numbers. They're obviously in pathology. Now, where do you see further? Caroline, what's reporting next week? Are you across what's reporting next week?
So on Monday we have Bingo, we have BlueScope Steel, NHF, so NIP Holdings. On 24th of February we've got Accent Group, Appen Technologies. Friday, the one that we're looking at is Kogan.com.
Oh, that'd be interesting. Thoughts, Mr. Cow? What do you think is going to report well? Any sort of clues moving forward? Or
if we go back at what's previously done well, BHP and Fortescue we already spoke about. Consumer discretionaries generally, we tend to focus on the ones that we have been getting our clients into. So JB Hi-Fi, Breville Group, and Super Retail all had positive reactions on the days of their announcements. One common theme was increased in online sales, which shouldn't surprise anybody. And with stuff reopening generally, that portends well. One thing that was kind of interesting though is, just off the top of my head, I think CSL was one. I'm forgetting a very obvious one, but anything that had exposure overseas.
Cochlear?
Yeah, maybe it was Cochlear as well. Yeah, I think
that was up quite.
That's
big,
right.
big
But
the other day,
what I was going to say was actually a little bit of a dampener on some of those, is because if you compare it to this time last year, our currency is significantly higher against the US dollar.
Yes.
So anything that is any company that's deriving their earnings in US dollars is converting them back into Australian dollars at a worse rate, if you think of it from the perspective of the US dollar. So, for example, who reported the record dividends? Was it CSL? So it was record dividends in US dollar terms. Once they converted it back into Aussie dollar terms, it was no longer a record. So that's actually just something interesting there. If you've got more revenues coming in versus costs in that foreign currency, actually the strengthening US Aussie dollar is not going to be helping you. But generally, Ansell reported well as well.
I was surprised. Shock horror.
EML had a very positive reaction to it.
But his report wasn't great, right? It was same with Treasury Wines. They didn't have particularly good
That's one of your favorites. We should probably turn the camera back to you and let you talk about Treasury Wines.
Well, listen. The thing I always say about Treasury Wines, and it's not something that we've got people involved in. It's not something we're recommending by any stretch of the imagination. But I always like to say, I like wine, you like wine. Why isn't that going to go up? But of course, it had some pretty negative, because of the old China tensions, it had some pretty negative numbers come out. So did EML, and of course, skyrocketed. They've really seen some good movement.
It's a great example. It's all about expectations. No one thought that Treasury Wines was going to report an incredible result. But if you've already baked in a negative result and it's less negative,
Yes.
then the share price can appreciate, and it did very much so yesterday.
Very good. Very good. So that's the best and worst of the ASX this week. Now, do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe even average in? Why not send us a message and we can ask our panel? In the meantime, let's take a short break and we'll be back with our final section of the show.
Get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back. The moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. We know what oil, gold, and the dollar has done. We know what the top performing sectors were. Now let's find out what our panel is looking at for the week to come. Caroline Wong, we're going to start off with yourself. You've been keeping a very close eye on a good opportunity. I think we may have mentioned it before on the show, but you think now it's coming into a bit of a buying area. What do you like this week and why particularly at the moment?
I like Exit Group Limited, ticker code AX1, local retailer, importer, wholesale of international footwear brands such as Skechers, Vans, Dr. Martens. Do you wear any of them?
I don't. I tend to not, but I do know that they are very popular.
What is your brand of choice, just out of interest?
I like just black shoes because obviously I spend a lot of time in suits, etc. I suppose just Nike. I suppose if I go to the gym or work out, Nike.
Nice
but,
corporate black Nike shoes.
Yeah, corporate black Nike shoes. No, I never really got into that whole sort of aspect of something. But I've heard that, I mean, obviously I do know Skechers, and I do know some of the brands that we've mentioned. On quite a good online presence?
Yes, correct. So it has a network of 500 stores and it maintains an active online presence through 19 websites it operates. So macroeconomically speaking, the business has done well through the various pandemic-induced lockdowns. And also more recently in the year-end retail events, it has done significantly well through Christmas, Black Friday, and more recently, the back-to-school trading period.
So it's you could say that's off to a bit of a running start to the new year. Because lifestyle footwear that people run, don't worry, forget it. That was not okay. That was not the best one.
Bad.
Yeah, not bad.
It's not the worst one either, though. So.
Yeah, not the worst one ever. So yeah, it's been moving in a positive direction. Yeah.
Yeah. So fundamentally, it's a very sound company. Return on equity, revenues, and earnings up for the past 3 years. Citigroup likes it a lot. Gave it a buy rating with 12% upside. If we look at the charts, it's rebounding. From a recent pullback, almost approaching the mid-Donchian channel, stochastic positive and diverging, and also the MACD is converging, looking towards a positive direction, potentially.
It's a pretty sharp upward accent, isn't it?
Oh.
Yeah, see, moving in a positive direction. Moving on. Let's move on straight away. Mr. Ryan, you've been keeping a very close eye on an opportunity. What are you looking at this week, and why do we like it this week?
Well, the company I'm looking at is Ansell Limited, and I'm pretty sure everyone would know this company. They obviously deal in items used for certain protection, but that's also personal protective equipment, so gloves, things of that nature. And I'll get into the report in just a second, but I think moving forward, what's really worth noting is that, from my analysis anyway, that none of these vaccines actively prevent transmission of COVID-19. Because of what's happened in the past year, people will be so concerned about getting diseases or any infections, viruses of any variety or persuasion. I think the obvious conclusion is that, we got the vaccine, it's all good.
Yes.
I think what people aren't noting is that the vaccine doesn't do a whole lot for transmission. It just cuts back the symptoms.
Okay, yeah.
So you're still, potentially infecting other people despite the fact you've had the vaccine. So the need for masks, gloves, things of that nature may just continue to, be consistent in demand. Moving forward, a company like Ansell, which deals in those products, as well as condoms and things of that nature, could do very well.
It doesn't do condoms anymore, though, does it?
Does it not?
No, it's actually they've
sold.
sold.
I'd temporarily forgotten that, but worked
They've
out.
sold off.
They sold it to a Chinese brand and a Chinese company and someone else as well.
I was lied to. So.
I was glad to.
In any case, So, the glove business obviously is going to be a pretty big aspect. The report was pretty positive as well. So have a look at some of the figures. Sales were up 24.5%, EBIT 60.6, profit attributable 61.9, earnings per share up 65.5, and dividends per share up 52.6%. So a pretty good report moving forward. I believe Lidsden pointed out as well that they're anticipating greater CapEx moving forward for expansions. Is that right?
I've read too many reports this week. But
I
if
think
I said it, it must have been true.
I think so. And so based on that, report was pretty positive, could do well moving forward. You have a look at some of the broker calls which came out recently off the back of that. Got Morgans with an add, Citi with a buy, Credit Suisse outperform, Morgan Stanley overweight, Ord Minnett accumulate. So a lot of positivity surrounding the company, and I think all those factors really combine nicely. If we have a look at it on a technical chart as well, you want to pull up. I think that's in a Williams Alligator upward trend. The MACD, it's got a positive nominal reading, a lot of green on the histogram, and again, good report, good company, good offering, fits the macro climate. Broker calls are good. I think it'll do well.
And it's also come out of a report, so no unwelcome surprises
Exactly.
there. Very good. Mr. Cow, what are we looking at this week?
I like Baby Bunting.
Baby Bunting?
BBN. I'm actually a big fan of their logo. I don't think we have a picture of that, but I just think it's very simple, but also very creative.
Yes.
So why do I like it? Well, firstly, who are they? It's in the name.
Yeah.
Infant products, accessories, and consumables. They
Really? I
have
thought
online
they had
presence.
retirement villages.
Yeah, or you know what? Yeah, it could be somewhat an ironic name, but they do have online presence as well as the physical stores. So I was actually just in one over the weekend. So they reported, I believe it was a week ago. So part of the highlights of that report, market share increasing, plans for New Zealand expansion, online sales growth, like with all the, what we mentioned earlier with consumer discretionary, 96% growth in online sales. Gross margins were up as well, and the interim dividend was higher than the prior corresponding period. Now, on the back of that, we had a whole bunch of broker reports come out on Monday.
Yes.
And every single one that covers them, so Macquarie, Citi, Morgan Stanley, Ord Minnett, and Morgans have them as buy, add, overweight, whatever terminology they use that's positive.
Yes.
They had that on it. And Morgans upgraded them from their previous hold as well. And if we take a look at the chart as well, which I think we're about to bring up, you can see in the upper Donchian channel, Williams Alligator uptrend. Whenever you see, what you don't want is to get on the absolute high. And we saw that it did pull back on the back of the results, but it was only for a day and then it resumed its ascent. That's the sort of thing that I personally do like to see. You do want to see the pullback and the resumption as well. I feel like that's a little bit risky than something that just goes straight up, maybe like something like Bitcoin. You just don't know where it's going to stop and where the stop loss should go. So we have been buying a lot of clients into Baby Bunting as well, so quite positive on that.
Now, also it's considered an essential service. Now, I didn't think about it that way. I'm like, when you think of essential services, you think about hospitals, etc., gas stations, essential stuff, essential supermarkets. But obviously, you can't help the fact that if you got pregnant 3 months before the start of COVID and everything goes into lockdown, that's not your fault. It's an essential part of what you're going to have to do. Would that be, is that right?
Yeah, I remember that you did mention that. Clients have made money out of Baby Bunting previously as well. So that's another great example of, well, just because you've been in something before doesn't mean you can't get back into it again. But I do remember the previous time you did mention, because we were more heavily into the midst of COVID at that time, but even in Victoria, they kept all the Baby Bunting stores open. Is that correct?
Yes, yeah. So even in Victoria, they kept all the Baby Bunting stores open, but they had a lift. I mean, this is going back a year ago now, but they had a lift on their online sales as well as their physical in-store sales. I had an interesting question from one of our clients. He came up and said, isn't there a lot of competition in that market? Why would you go for Baby Bunting when you could go to Kmart, etc., or something along those other lines? Now, I didn't have an exact answer for what that is. My assumption is because you always want to go for the best for your newborn child, and Baby Bunting would be arguably one of the better, if not the best. Is there another reason?
Yeah, I don't want to speak badly of any other retailer, but Baby Bunting is a special, I mean, it's in the name, but they are a specialty store.
Yes.
And just from very recent experience, they have a much, let's say, just focus on car seats, one product. They have a much wider range of car seats than, say, a Kmart or a Big W. To be fair, Kmart sells a lot more other things.
Yes, of
so
course.
they can't afford to, they don't have the space to stock that many of it. But yeah, I think people are just a little bit more comfortable. Like, I always think of Baby Kingdom and Baby Bunting. Maybe just because of where I live, they're not that far away, the physical stores as well. But I think generally the first ones you think of are to go to stores like that So I suspect that's part of the reason. I don't want to talk badly about Kmart or any other store though.
Very good. So we've got Baby Bunting, we've got Ansell, and we've got Accent Group. Ladies and gentlemen, thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend, and we look forward to seeing you next week. My name is Will Brownlee, and this has been the KOSEC Show.